Good morning, friends. It's Tony with Linda Craft and Team Realtors. I hope you're doing well today. The mortgage market has started to move, and if you haven't been paying attention or haven't noticed, in the last 90 days, according to the Mortgage Bankers Association, the average 30-year mortgage rate has gone up roughly 1.5%. To put that in perspective, the current rate for an average borrower, of course, you need to speak with a licensed mortgage professional to understand where your rate will be, is 5.37% as of today. Comparatively, 90 days ago, obviously, it was below 4%. So that's a pretty meaningful growth in interest rates, and that is a pretty meaningful hit to a monthly budget as to what it costs on principal and interest to support a home purchase. However, let's put it into perspective. What's going on right now, and what I thought I would do, is put my finance background to work for you. Many of you may know I have been in real estate finance for an extended period of time before becoming a real estate agent. Also, as a homeowner, I've purchased 13 homes and sold 11, and that's all before I became a real estate agent as well. So I'm quite familiar with many of the loan products, and I've used quite a few of them. So when people talk about buying a home, most people think about a 30-year fixed rate. Why? Well, you get duration. You get 30 years to pay it off. You get a fixed rate, which means your housing costs are fixed, and you know what's going to happen. Okay, that's one of the big benefits compared to renting. Rents go up, rents go down, they go sideways, they go backwards. Who knows? But it's outside your control. When you purchase a home with a 30-year fixed rate, you know what your monthly payment's going to be with respect to principal and interest. Historically, there's also been another product, usually for folks that are older or nearing retirement, or who have had significant income growth, and that's called a 15-year fixed rate mortgage. Pretty simple. A 15-year fixed rate mortgage gives you 15 years to pay back the loan as opposed to 30, but your rate is fixed. What's really interesting in today's market, and this might be a great situation for folks looking to refinance their homes, cash out some equity, or possibly buy a new home, who are further along in their financial foundation as far as what they have and as well as their income stability. On a 15-year mortgage right now, the interest rate is about 4.68% compared to 5.37% for 30. That's about a 70 basis point or 0.7%, a little less than 1% less expensive. And typically, historically, however you want to think about it, usually if a rate change was 50 basis points, 0.5% in your favor, and you were going to stay in the house long term, it would make sense to refinance. So 70 basis points is certainly encouraging and worth considering with your mortgage professional. But let's talk about the hidden gem that a lot of people have forgotten about. I've got one arm, I've got two arms. Let's talk about the third arm. The third arm is called an adjustable rate mortgage. Exactly what it sounds like. Adjustable rate mortgage, typically referred to as a 5-1 arm. What does that mean? That means your interest rate on your loan is going to be below the fixed rates typically, and that is now occurring. And your rate can adjust up or down by a certain percentage point, usually 2% either direction. Now, that has not been a favorable product in the last couple years because 30-year fixed rates have been so low. But right now, the adjustable rate mortgage is about 4.28%. So let's think about that. 5.37% fixed, 4.28% fixed for a year, adjusts, fixed for a year, adjusts, and continues for 5 years. My first home purchase was with an adjustable rate mortgage. It was a 5-1 arm, 2-6 cap, which meant 2% and capped out at 6% movement. And my mortgage by memory was 7.5%. So when I looked at could I afford it, I would write down on a piece of paper and calculate, okay, at 7.5, if it goes to 9.5, if it goes to 11.5, how does my situation look? The good news for me, and this is where ARMs usually make sense, ARMs make sense if you have a growth potential in your income profile, or if you have a shorter home ownership duration. What's really interesting is the average home ownership is continuing to contract. It's about 8 years right now, and it's definitely contracting. It got as long as just under 11 years during the financial downturn. But let's talk about an ARM. And I know I'm boring you with math here, but it's really important. So let's say we're going to go out and buy a home and take on a $500,000 mortgage. So the fixed rate mortgage right now would be at 5.37%. So my monthly payment of principal and interest alone is going to be $2,800. Now let's compare that to an ARM. On the 5/1 ARM at 4.28%, my first year's monthly payment, principal and interest only, is $2,468. That's a pretty significant difference. It's actually almost 14% cheaper. So again, if you are a first-time home buyer, first-time move-up buyer, or your income profile has got a lot of growth potential in it, an ARM might be a fabulous way to get into the house of your dreams. Again, the difference in rate right now is about 1.09%. In the last 90 days, rates have gone up 1.5% on the 30-year fix. So you've just been able to recoup 70% of that rate inflation. Everybody loves that word, inflation, rate growth. And it does come with risk. You definitely have to look at it and say, Tony, if my rate is 4.28% today and it goes up 2%, what happens? Well, that means your rate resets on your anniversary, and it would go from 4.28 to 6.28 if you had a 2% cap. And that means your mortgage payment would go from $2,468 to $3,088. That's a lot. That's $620 a month. However, you have to talk with a mortgage professional, understand the probability for that happening, and also what else is going on in your income profile. Guys, I hope this was helpful. Please reach out. Think when it's real estate at Linda Crafton team. If you'd like a referral to a qualified mortgage professional who's deeply experienced in this, let me know. If you'd like to talk about my personal experience, I've used ARMs quite successfully early in my stage. As my income profile got set, I used 30-year fixed rate. So lots of different options here, and I've got a lot of personal experience in thinking about it. Love to share it with you. Hope you have a great day, and thanks for paying attention.